Bender, and I'm back with Fridtjof Markinson, our manager of financial planning. And today we wanted to bring you a segment on tax refunds are not savings. Obviously with the big exclamation point, right, you can tell I'm really serious about this. So Fridtjof, tell us, why aren't tax refunds savings? I'm getting money back, I'm saving something, right?
Well, tax refunds, having a larger tax refund than you should is a bad thing, because you're giving the government your use of your money when that could be earning you interest for that period of time. And normally this results from you having too much withheld from your paycheck, or maybe you're making too large of an estimated payment. And as a result, the government gets the money for that period of time and you don't get to use it. It doesn't get to compound for you in your investment account. And as a result, you might have a cash flow shortage, and you might be tapping into credit cards or just feeling the crunch from that, and not having use of those funds.
And that definitely can create a lot of other problems in your financial plan. Let's quantify it a little for you. So we have our handy dandy whiteboard. So let's just say that you're 40 years old and you are getting a $3,000 refund back from your taxes, and you're getting that every year. So let's say that we put that $3,000 over into an account that made 8%. So we did that until we were age 65 when we wanted to retire. And at age 65, we would have had $236,987 in that account. That's what it would have grown to. But we know that we have a lot of goals and dreams and things that we want to do in retirement, and so we're going to need some of this money. So let's say that we took a 4% distribution out of the money each year. So the money has got to last us a long time. In retirement, your money can't retire when you do. We've got nearly 30 years of retirement, right, that we have to worry about. So what happens to this account over this period of time? Well, you start distributing money, and you're going to distribute this 4% every year until you're age 90. And it is shocking, but you will distribute $401,000 to yourself for use for all of the things that you want to be able to do. But what would have happened to this account, right? We're distributing money out of it, but it is still invested, it still continues to grow. Here's the most shocking thing of it. At 90, after you have distributed $400,000, you still have $600,000 in this account. So if you add that up, right, it's over $1 million. And how much did it take you to get there? $75,000 was all, and it all came from money that you were actually already trying to save, but you were getting it back in tax refunds, and instead of not only saving it, but having it work. And it provided you $1 million into your asset base.
I'm sure that value added to your plan as part of your retirement income plan is going to support your financial goals in retirement, discretionary expenses, your fixed expenses, and then your legacy planning.
Absolutely.
Maybe charitable as well.
Right, for sure. There are so many opportunities. So you have to understand, when we take a look at people's situations, one of the things that we will do is say, are you over withholding? And we have a program here that helps us determine, are your withholdings correct? Are you not giving too much of that money away to the government instead of putting it into your pocket to save? And we're happy to run those looks for you, because we know that this is the way to help you have $1 million in your pocket. And if you're younger than 40, then more than that. It's an amazing power of compounding and best use of your money. So we certainly hope that you'll reach out to us, let us take a look, especially with all the new tax reform. Are you withholding properly? And let us take a look at a financial plan and make sure that we're putting that money to the most effective and best use for whatever your goals and dreams are. So I'm Angela Bender with AMJ Financial Wealth Management.
Fridtjof Markinson, your manager of financial planning.
And we are so happy you could join us. We hope this really drives home why tax refunds are not savings. Thanks, guys.